Good afternoon, everyone. I have the great privilege of being able to speak about a often very neglected asset class, but one which invariably comes back into vogue as a consequence of the fallacies and the foibles of men doing what they do best, which is to spend money that they don't have. The case for gold is a very simple one. It is money. You don't have to be a gold bug. You don't have to be a barbarian. You don't have to view gold as a barbarous relic. But there are very few assets that over the course of thousands of years have managed to maintain their value and have allowed people to be able to have security as a store of value. The most famous one of all, a brand even more well-known around the world than Apple, is gold. Let me just go back to this for a moment. My background is not as an engineer, nor as a geologist. My background is as a historian. The relative advantage that I've had in this business has been understanding cycles and being able to apply a thorough and rigorous examination of fundamentals into how those cycles are going to evolve. The story of gold is like many historical cycles. History doesn't repeat itself, but very often it rhymes. I would say to you that one day, for those of you who are in the audience, I do believe that you will look back and you'll remember some of this as being a harbinger of what we're likely to see in the gold space. I do believe that we are going to see, and that we're in fact witnessing in plain sight, the continuation of a bull market that will take gold from its present $1,400, $1,500 area to somewhere between $3,000 and $5,000 as a normative supply-demand equilibrium. It could go significantly higher for a number of macroeconomic reasons, which I'm not going to dwell on too much today. What I'd like to do is to take the opportunity to be able to give you the insights of someone who has been in the natural resources business for 25 years, and if it's worth considering anything that I have to say, over those 25 years, the Electrum Group and its predecessor companies have had a plus 70% annual compounded rate of return by following the kind of asset-driven strategy that we are using today in the gold and silver space. Electrum, of which I am chairman, refers to a naturally occurring alloy of gold and silver, which is the primary area of our business. I also serve as the chairman of NOVAGOLD, which is a publicly traded company that is the flagship of our gold investment. Typically speaking, I don't feel that I have the need to hold hands with others who might share my point of view. Very often, I tend to be early, perhaps too early for portfolio managers, and I have found that over the past couple of decades, even though I may be early, eventually people do come around to my point of view if I have my fundamentals right. It just so happens that in the case of gold today, we have a number of what one would call bold-faced names who have come out as being constructive, if not downright bullish, on gold. And for very rational reasons. I think anyone here who's familiar at all with Ray Dalio would admit that Ray Dalio is hardly emotional when it comes to picking investment opportunities. Indeed, he is self-avowedly hyper-rational. And yet, I think Ray Dalio put it beautifully when he said, gold is a currency. We have dollars, we have euros, we have yen, and we have gold. If you don't have, and he recommends 10% of your assets in gold, then there's no sensible reason other than that you don't know history or you don't know the economics of it. He's absolutely right. The history of gold suggests that it is an enduring asset class. The economics of gold, particularly today, suggests that the horse is already out of the barn and that we're going to see much higher gold prices. Not because of what I would call the fear factors. It's not because of central bank defaults. It's not because of even money printing. It's not because of war. It's not because of Iran. It's not because of any of dozens of black swans that are circling above such that the sky is darkened with them. It's because of the nature of the business itself. The gold industry is in deep trouble. And any industry which is challenged to the extent that gold is today represents an extraordinary opportunity if you pick the right assets. This is our expertise, picking the right way to be able to gain leverage to an underlying theme. And now I would have to say, because that was our mantra for 15 or so years, choosing the right jurisdictions in which to play, because the last thing that you want to do is to get all the leverage you want to an investment and then have it taken away from you. But pointing out that you have people like Dalio, Gundlach, Paul Tudor Jones, Stan Druckenmiller, Jacob Rothschild, Paul Singer, Ken Rogoff, they're all citing different reasons for why they're gold bulls. And this is extremely important because gold is not a crowded trade. Even if you were to add in relative newcomers like Mark Mobius with his experience in the emerging markets, or even the great Sam Zell, who is brilliantly opportunistic when it comes to real assets. All of these people have chosen to be bullish on gold for various reasons, and often very different reasons. Why is that significant? If gold were a crowded trade, you could look upon these things potentially as contrarian indicators. So you have smart money speaking constructively about a trade that is not remotely crowded. What that means is that when gold pops, and it will, you're going to see people have, more than ever before, a justification because of the many, many hooks on which they can hang their hat to become gold bullish. It will be easier for people to buy gold at 1900 than at 900, at 2500 than at 1500, because the real money is not yet involved in gold. But when it comes, the gold simply isn't there to be able to provide the demand until gold is at a much higher equilibrium price for supply and demand to meet. Suffice to say here that as a consequence of the correction within a bull market that's taken place since 2010, 2012, there's been an absolute collapse in exploration in the gold space. Very, very few deposits. And candidly, these are deposits that in most instances wouldn't even move the needle for us as investors, have been found. Fewer than ever before in modern history. Those expenditures are starting to perk up a little bit, but this isn't hydrocarbons. In hydrocarbons, and this is an area that I actually know rather well, we've done very well in hydrocarbons. In hydrocarbons, you have vast reserves, which with new technologies, you can gain access to. If you have fracking, if you have horizontal drilling, and you have large resources, where there's a will, apparently there's a way. One of the reasons we exited hydrocarbons in 2007 and never went back into them was because of the advent of something called shale, which at the time was only vaguely understood in terms of its significance to the marketplace. We never returned because, having felt that oil would go to $100 when it was sub 20, when it did hit 100, we didn't know whether it was worth 120 or 20. And I still don't, which is why we don't go back to that area. Gold is very different. You don't have large, untapped resources that a new technology. You can't even find it easily. We don't have the equivalent of 3D seismic. Gold is still primarily found by a geologist, a man or a woman, in a 4x4, a four-wheel drive, used to be a donkey, and that's how primitive the industry is. I love it because the barriers to entry are exquisite. One takeaway, if you made a major discovery today, something that could absolutely move the needle in the gold market, the average time between discovery and production is now plus 20 years. In other words, if I'm right on the supply-demand disequilibrium, it's already game over. This is a very bullish chart. I would point out that the first leg of the gold bull market was 12 years. Every year, gold ended higher than it started on January the 1st during that 12-year period. Whether there were inflation fears, deflation fears, strong dollar, strong oil, weak oil, political instability, political stability, it didn't matter. Every year it ended higher. That's a bull market. What you've seen since then has been a retracement, and now what looks to us to be the beginning of the next leg of the bull market that's very likely to last over a decade. The first two legs, one up, one down, have been on that order, and is likely to go right past 1900 to a whole new level. And that's not even the bullish case. That's just based on the fact that the demand for gold as an asset diversifier, a safe haven, a protection against currency debasement, because gold is the only financial asset that doesn't represent anyone else's liability. The fact that central banks, according to Goldman Sachs yesterday, are now consuming 20% of gold supply on an annual basis. That's enormous. Central banks are the ultimate insider buyers because they know more than anybody else that most of what they have in their treasuries is duplicable, and people want to debase it. Gold is a protection against inflation, deflation, and of course you have emerging market demand, which is increasing across the board. The two biggest consumers in the world are India and China. At the same time, discovery rates have collapsed. Exploration budgets are such that the majors can't even replace the reserves from which they're producing. Ore grades have collapsed by 50% over the last decade, which means that production costs have doubled. It's just simply a function of math. The jurisdictional risk, which a decade ago people didn't think existed, is now the #1 existential risk to mining. So when you take all of these things together and you see that production has already peaked, it's now rolling over, and as a consequence of a number of those factors, including the jurisdictional risk, it's set to plunge. Nothing is going to stop this. It's already done. It's already game over, for all of the reasons that I mentioned. It's not the same as in hydrocarbons. Gold provides very, very solid asset protection during dislocations. This is known. I won't dwell on that. The M&A is increasing all over the space because without new discoveries and with the lead time of 20+ years, majors have to replenish their reserve pipeline in order to make themselves remotely attractive to investors. So when you look at the industry reserves in decline and the lack of discoveries, what we see is that because the way we have made our money over the years is through what we call category killer assets, the greatest asset that we've ever managed to take control of over the last 25 years, and we've either found or taken control of some of the best assets in silver, in platinum, in hydrocarbons. The best asset that we've ever been engaged with is the Donlin project, which is 50% owned by NOVAGOLD, 50% owned by our partner Barrick. Donlin is the classic example of a category killer. It's going to be the largest single pure gold producing mine in the world. And I say pure gold because I'm deliberately distinguishing it from between a polymetallic such as gold and copper. And there's a reason why we focus on the gold aspect. Our attitude is gold will do well if the world does well. And gold will be one of the only things that does well if the world does badly. And the fact that it's pure gold rather than base metal, we find very attractive for this particular vehicle. We're very lucky to have half of it, and by the way, so is Barrick. And those people who want to gain exposure to Barrick can absolutely see that when Barrick starts to talk more about this asset, which I expect that they will, the relatively new CEO of Barrick, Mark Bristow, has started to describe Donlin as the greatest option on the gold price in the world. That's coming from Mark. Mark is a pro. He's a very dear friend, but I think he would be widely regarded as one of the greatest CEOs in modern mining times. Those who want to buy diversified production and diversified geographical exposure can absolutely find a great vehicle in Barrick. I believe that Donlin will add dollars per share. For those who want a pure play on a North American asset that promises to be, in our view, the next Nevada in terms of size and quality, NOVAGOLD is the play of choice. NOVAGOLD is located in the second largest gold producing state and the safest jurisdiction in the world. That's Alaska. Alaska is the home to some of the largest mining operations in the world. Our permits are in place. The federal government gave us our environmental impact statements last year. Effectively, we're just waiting for when gold is higher, and that's when we and Barrick, I suspect, will jointly make a decision to go into production. We're not in a rush. Our attitude is it isn't our business to subsidize Chinese and Indian consumption. It's our business to make a killing on this asset and to make our share price multiply. In terms of size, Donlin is practically off the charts, and we believe that this is only a fraction of that which you'll actually find in the district. In terms of size, but also in terms of quality, the fact that Donlin will be one of the highest grade, large-scale open pit gold mining operations in the world is extremely positive, because what that means is that our cash costs will be amongst the lowest in the industry. So what you have here is something that is going to be 1.5 million ounces in 1 or 2 phases. The mine life is very likely to be measured in decades, and it's located in the very best place to be a mining company from any standard. The 39 million ounces is drawn from only 3 kilometers of an 8-kilometer belt. We can see a multiplication of the resource and reserve base at Donlin, and I would have to mention that that 8-kilometer belt literally represents less than 5% of the total land package. Our belief is that the next Donlin will be located at Donlin. Geopolitical risk is the existential factor today. You want to be in a place where you have leverage to a theme, but in a place that will allow you to ring the cash register when it comes time to reap the fruits of the leverage. That leverage, by definition, is absolutely extraordinary. At $2,000 gold, we're talking about $10 billion almost to the account of NOVAGOLD, just on the basis of what we can actually see right now in front of us, not with any of the exploration potential. And I think that that could take the stock well back into the 20s or 30s and ultimately higher. We've been in this movie before. There have been times where we've made 100 times our money on assets which are not unique. This asset is truly unique. There is no other asset like Donlin that combines the size, the grade, the exploration potential, the production profile, the mine life, all wrapped within jurisdictional safety. We have a fabulous pair of local partners on the ground, the native corporations of TKC and Chalista, and the company is extremely well regarded for all of its environmental and social policies. The company has plenty of cash, no debt. We sit on $150 million in cash. The burn rate could be as low as $10 million while we wait. And we have another $100 million coming to us from Newmont Mining as a consequence of an asset that we sold to them a couple of years ago. So you're talking about $250 million in liquidity with the lowest burn rate that we've ever had because we have our big federal permits. The shareholder base, I'm very proud to say, is a lot of very, very smart money. In addition to our family and our partners, Mubadala, you also have Fidelity. Will Danoff's Contra Fund is the largest component of that. Paulson and Company. John Paulson regards us as the best way to be able to play gold. Van Eck, BlackRock, First Eagle. The Agnelli family has been accumulating shares in the company. We're viewed as a very, very safe way to be able to play a bull market in gold. And we have a track record, which I hope acts as an inducement to others taking a closer look at this and trying to understand why it is that we believe this is the right entry point. Between the balance sheet, which means that we do not have to raise capital and won't raise capital until the share price is much higher. We don't do down rounds. The asset itself defines what a tier one asset would look like. We're now working with Barrick on optimizing it to determine whether we want to look at one or two phases. Our stakeholders are supportive from the local level all the way through to our partnership with Barrick. Relations between NOVAGOLD and Barrick are excellent. We're firm supporters of Mark Bristow and the Randgold team. They're top notch. Our production profile will make it the biggest. The leadership team, actually almost all drawn from Barrick DNA. Our CEO was president of Barrick Gold North America for 8 years and was with Barrick and its predecessor companies for 30 years before he came and joined us. And finally, we're in a place that when you go to sleep at night, when you wake up in the morning, what you thought you owned the night before, you still own. In today's world, that is the sweetest luxury of all, to be able to get a great night's sleep with something that will either make you rich slowly or very, very quickly. Thank you very much.